The stock market isn't just hot, it's overheated. Everyone's greedy, valuations are inflated, and history said this is when the smart money takes profits now. So, in this episode, I'm going to show you why this might be your best chance to cash in before the correction hits, and I'm not alone. Here's why. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. This show is for you if you want to become work optional, where you want to have your money working harder for you, so you have to work so hard for money, where you have enough passive income coming in from your investments that you work because you want to, not because you have to. But you're not just here to get rich, but you're here to live a rich life. Because as you grow and increase your stewardship and become more financially free, this allows you to not just be able to do what you love with those you love, but it also allows you to create a ripple effect and bless the lives of others. Thank you for tuning in and allowing me to do the same for you guys. It's been such an honor for the last 11 and a half years that we've been doing this podcast. And for faithful listeners just like you, this is what's allowed us to be able to do this today. So thank you so much. Listen, if you're looking for ways to create this more passive income, or you're even looking for infinite banking, you can always find more information about this at moneyripples.com to figure out how you can take control of your life and your finances right now. Okay, so let's talk about the stock market. It's getting frothy. It's getting greedy. If you've heard me say this before, this is not the first time, but I want to share with you that I'm not the only one saying this. Now, even mainstream media is starting to question it. Now, when I say mainstream media, it's not all mainstream media. Most of mainstream media is telling you to keep doing the same thing. You go to Reddit, you go to whatever, little boards, comment boards, and everything, and most Americans are going to tell you you're an idiot if you get out of the market right now. However, there are some economists saying, what are you doing, right? And so let me share with you exactly what I mean by this. Okay, so this article is on Yahoo Finance. You can find it. It says, very speculative, very frothy, very greedy. Wall Street says stock market's rise to records poses risks. Now, this is not the first time you've heard this, whether it be from me or anybody else, right? People always wonder. Let me get rid of this. People always wonder, right? But here's the thing, is like, what's actually going on? Now, here's one of the biggest things I want to just kind of take some highlights from this, right? For example, they talk about the NASDAQ has surged 46% since the low in April. 46%, guys. That's huge. All of it around AI. Now, I know you guys have heard this again. That AI bubble is just going crazy right now. Here's the thing, guys. The Citigroup, they have their own, I don't know if I'm saying this right, Levkovich. Yeah, I think it's right. A Levkovich index that they have. They actually show that index showing it being beyond. Now, the index has not been updated from July. I try to look for it for you guys. This is as of the second week of October. It might be coming out here pretty quick. But what they're saying is this. So this one's showing you it's in this massive state of euphoria. Now you'll see the red line here. It's actually up to where the red line is, which is in the Euphoria, the latest reading, right? And you can see other times as well. Like, for example, you can see here 2021, it was in Euphoria. And then, of course, 2022 or end of 21, and bam, it comes crashing down to below the panic level, right? And then it popped back up. We only saw that brief little bear market. But we can see other times this happen. We can see this happen again, with looking at the 12-month forward return, predictions of profits and things like that. Happen again in 2000, 9 is there, but also we had it again happening before, right? So there's other times when it's hit this point. Now we saw different things in the 2007 recession because it was more real estate based versus the stock market, but the stock market still dropped significantly in 2006. You can see even then, 2006 and really '07, right? We get to the latter part of '07, it was getting up above. It got to 25%, or in this case, it says 0.52 is what it's reading. Right now we're at 0.65 as of July. I don't even know what's going to be, later on. So, and we can see Y2K. We've been compared to this a lot of times. Y2K, same thing. So we've had this state of euphoria for quite a while. So that's problem number one, right? Like, obviously the returns are just not as big. To further go along with that, they talk about the actual profits, right? It says that now it's roughly 25 times expected earnings. Guys, that means that, imagine this. Imagine if you put your money in an investment and you had to wait 25 years to double your money. Would that be a good investment? That's where you are right now with the stock market, right? And of course, they've talked about that. That means for this to keep going up or even to maintain, earnings would have to climb at least 13% next year, another 10% in 2027, just to justify the current prices. So, guys, this is where people have massive overconfidence in what's going on right now because the type of earnings we're talking about, they're not predicting that high. But again, the market is pretending like it is. And so this is where it comes to Chris Watling, with his little quote here. He's a global economist and chief market strategist at Longview Economics. He says this. He says, what we see at this moment is a market that's running extremely hard. He says it's starting to look very speculative, very frothy, very greedy. And that's generally the kind of setup you get before you get a pullback. He also pointed to a record level of single stock call option buying, right? They're way above records from previous peaks. Here's what that means. If you guys aren't sure what call options are essentially predictions, right? So when you buy a stock, right, you buy a stock, you expect it to go up, you make money. A call option also predicts the stock to go up, but it expects it to hit a certain price by a certain date. If it does not do that, you lose a significant amount of money or possibly all of your money, depending on where it's at. So right now, people are buying call options because call options are when it goes up, put options when you predict it's going to go down. People are buying these call options, predicting everything to go up. This is a much wider, more volatile type of way of buying it. Stocks seem boring compared to call options. I have literally watched, when I was a stock trader and a coach, coaching people, I watched a guy that literally did call options on a particular company. 1 week later, lost 90% of his money because he didn't know what he was doing. So now there are a lot of people that do know what they're doing when they're doing this, but it means that, again, people are throwing it in. This is over speculation, right? They expect to keep going up. But the problem is what's happening. And he's talking about this. This is what I really worry about. Everybody gets sucked in and the shorts are getting squeezed and the market suddenly got no downside protection. Furthermore, you look at it like this, right? Even this, he even said this too, right? He says, I'm not suggesting the bull market is over for good, but if you can get out of the way of the pullbacks and big stocks that have gone up a lot, you can actually save yourself a lot of gains, book some gains, and get back in a better level. What is he saying? Remember, I was talking about dollar cost averaging, and there's some people that are like, no, dollar cost averaging is the best thing ever. He's saying, forget dollar cost averaging. Why don't we get your money out? Take your gains, wait for it to get back to a decent value, and then get in. Now, that being said, we haven't been at a decent value for years. Okay. This has been overbought. Valuations have been higher. Some might even say, they're like, listen, if you had done the same thing he's suggesting, Chris, or even you're suggesting or implying, Chris, because I'm not telling you to sell off your stocks, I'm just giving you an option here. But he's like, people would say, if you're doing what we suggest, we would have missed out on all these gains. We would have lost maybe doubling our money in the last 5 years. Maybe. That's maybe true. That being said, it doesn't mean that the market can't pull back and lose more than 50% and lose all of those gains you got over the last 5 years. Imagine if you did. Imagine if you lost all that money you had made in the last 5 years, maybe the last 7 or 8 years. That would be devastating, wouldn't it? That's my point. So I'm going to go off of this. I'm going to go to my own thoughts right now, because here's the thing is that if you've ever seen, whether you've been to an air show, if you watched airplanes fly, or even just watched a movie with airplanes, right? You ever seen an airplane when it starts climbing and climbing, it's ascending? And what happens? When it gets near the top, it starts sputtering a little bit, and then eventually stalls, and then it starts crashing. We're at the sputtering phase right now. It doesn't mean it's not going up still. If you've seen it, they still sputter on their way up because they got the momentum going up. But the problem is that gravity is pulling it back down. This is where we're at. You have to have massively good news. The sad thing is it took a government shutdown so that they don't release any economic information. And people are like, oh, it's okay. La, 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 la. Ignorance is bliss. That's kind of what people think, right? Just ignorance is bliss. I'm fine. This is where it's dangerous. And here's the other sign for me personally. I realize we're in a dangerous place in the stock market. If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now. Is that when someone who knows better, who's traded the markets, who was a financial advisor, who was all about watching the patterns and everything else with mutual funds. Again, watching patterns from a stock investor and from a financial advisor point of view, where I was very stock heavy. And I'm looking at saying I wouldn't dare touch it with a 10-foot pole, even though I would know how to make money in either market. Still, I wouldn't even touch the market right now because it's just, there's no logical common sense. And here's what's worse. Okay, this is an example that I know things are scary right now. Oracle, right? The tech company Oracle. Here's what's crazy. Up and going into September, Oracle is about to report their earnings. Up to that point, before it reported earnings, you see 9.9. The price was at $241. However, sorry, that's yes, 9.9241. The next morning, it opens. There it is, $319. So it went from 241 to $319. Guys, it jumped up 40% overnight from when it reported earnings. Now, you're probably expecting me to say that the earnings it reported must have been amazing, right? Wrong. Oracle actually had worse than expected earnings. That means their profits were less than expected. In any normal, logical environment, that would be a bad sign for any company. A bad sign to say, you know what? Expect earnings were down. We predicted higher. Therefore, the price is not as valuable as we thought. Therefore, the price has to correct. It did the opposite because of this AI craze that's going on right now. It's not that AI is not awesome, but it's gone to such a craze that still, even with bad earnings, worse than expected earnings, it jumped up 40%. Guys, remember, over 90% of trades in the stock market right now aren't even humans. They're algorithmic trades. They're literally like AI making trades, bots making trades right now that can do thousands of trades per second. This is not normal. This is not healthy. This is scary. And this might be as a result, even though it is scary, it's scary for anybody who just wants to sit and wait. If you're one of those people that just sits and waits, because remember, taking no action is still an action. That could be the most costly mistake ever. And you might look back and say, well, I've waited before and nothing bad's happened. Yeah, it's not bad until it happens, and then it's bad. And remember, the stock market's dropped fast. In 2007, when things were already hurting, we still had issues, right? We still had issues in the stock market. There were still issues in the economy, and yet the stock market didn't start going down until the end of 2007. And then it started coming back up in March of 2009. It had dropped and cut by about one half. People lost half of their money in the market in just a short 1.5 year period. Most people didn't respond to it until it already hit a low. They pulled out, and then the market came back up, which is why I always tell you, just stay in the market. But imagine this, guys. What if you could cash in your chips now? Maybe not all of them. In stock trading, we would call it scaling out, where we'd take a portion of the money out, right? We'd say, let's take some of our profits, leave it in. I did this with Bitcoin. I bought Bitcoin when it went down to $6,000 from a high of 20,000. I bought it at 6,000. It eventually came back up towards 20,000. What did I do? I sold off everything I invested plus 20%, because I knew worst case, I walked away with 20% gains and left all the rest in there to gamble. And then it took off. And then when it hit up towards 50,000, I sold off a bunch more again. That's scaling out. You pull off these profits and pull it out. If you're not sure if it's going to go down, there's no evidence. Great, pull some out. Again, this is not a recommendation, but this is a strategy that many people have been using. Warren Buffett's already been doing this the last couple of years. You're already behind the eight ball if you haven't been doing this yourself, right? He's been doing it. Everybody thinks he's crazy until everybody loses money, and then they call him the Oracle of Omaha. Ironically, we talk about Oracle two ways this time. That's the thing. He looks like an oracle then, but right now they think he looks crazy, even though he's actually outperforming the stock market even today with 30% of his money sitting in cash. This is the difference. Maybe you should be looking to diversify and get your money away from the market. If you're looking for solutions to do that, reach out to us at moneyripples.com. There are a lot of ways to do that and protect your money too. That's why we talk about infinite banking. That's why we talk about ways to create passive income with your money. These gains that you've been getting with no reason whatsoever why there should be, and now the plane's starting to stall out, this might be the time. You could look like an absolute freaking genius if you're able to cash in those chips, use that money to make more while everybody loses money. You might be one of the few people that come walking away at the end of this, and people will say, how'd you do it? You're like, easy. I listened to Chris Miles and Money Ripples. That's how I did it, right? I'm not a prophet. I'm not anything like that. And I'm not saying the market's going to go down tomorrow. Trust me, it should have gone down a long time ago, but everything keeps propping it up with more speculation, more debt. There's a lot of debt invested in the market, which is another dangerous situation to be in. There's just a lot of things. And again, people are ignoring because there's no economic data and they're just saying, well, that means no news is good news. No, it's not. The economy is still getting tighter. Things are still getting worse right now. Unemployment is not getting any better. Things are not getting better. Spending is not getting better. People are reducing spending, which would affect the profits, which affects your stock price. So if you're looking for that stock to keep going up or this price to keep going up because that AI bubble, guess what? It is literally just that a bubble. And at some point it's going to pop. Will you be on the winning side or the losing side? You get to choose. So again, remember, might be the best time ever to capture all those gains and look like the hero, to actually not just look like the hero, but actually protect your family and your future freedom as well. Everything might be hinging on this one decision you make. Again, if you make no decision, that's still a decision. If you want to make an educated decision, feel free to reach out to us at moneyripples.com. So go and make it a wonderful and prosperous week. We'll see you later.